to answer that, we welcome Katrina Paglia. She is Chief Legal Officer at Pantera Capital. Pantera has been investing in blockchain companies since 2013. So in any kind of downturn, we tend to see companies and investors seek safe havens, go for the safety play. What's the safety play in crypto?
That's a great question. You know, I think we're really excited about utility going forward. I think the stablecoin legislation that we saw passed last year really makes some interesting use cases for real-world application of stablecoins from a payment rails perspective. You're seeing additional institutional adoption of it. I mean, the U.S. Reserve actually has a stablecoin portion of the Treasury now, which is really exciting to see. In addition to that, you know, real-world assets, tokenization. I heard you talking about it earlier. Prediction markets, also really exciting right now, kind of getting mass adoption. A bunch of them are popping up now. Yeah, so those are kind of like the key areas that we're focused on.
Does the current crypto winter that we're in, and like last week's decline of, you know, more than 50% from those October 2025 highs for Bitcoin,
Yep.
Does that slow down adoption of tokenization, for example, just to pick one of the things you talked about?
Yeah, I mean, I don't think it slows it down. I mean, I think if you take a step back, we wanted Bitcoin to hit $70,000 for so long, and we're here, and now we're kind of, you know, lamenting a little bit coming down from the highs, which makes total sense.
Meaning you wanted it to hit when it was at $20,000
yeah, exactly.
or $30,000, but when you're at $125,000,
yeah.
do you want it to hit $70,000?
No, I mean, obviously you never want that, right? But I mean, I think we're looking at kind of a macroeconomic pullback, but really interesting to note, even though we may be in a bit of a downturn, the volatility we're seeing around this is significantly less than prior downturns. I mean, Pantera has been doing this for 4 different cycles now, and this is significantly less volatile than we've seen any of the prior ones since 2013.
Because of that institutional investor money?
Yeah, I think so. I mean, the maturity of the industry is significantly more than it was in the last cycle and the cycle before that. I mean, we're seeing TradFi and fintech companies come in. You know, you're seeing the JP Morgans have their own coin now. I mean, it's very hard to say that this is not different from the prior downturns.
Fair enough. What kind of businesses are less appealing in this environment, though? Are there any?
I mean, there's opportunities in a downturn, right? I mean, because you're getting things at a better valuation, right? This is exciting for the venture capital firms. You know, there's a flight to safety and a flight to stability when you do kind of enter these crypto winters. So we're looking for the more mature projects. Our check sizes are getting significantly bigger, even though deal flow has slowed down. Oh. Again, a sign of the maturity of the industry.
What about, to Scarlett's point, wouldn't a digital asset treasury company be less appealing right now? Look what happened to Strategy, $12.5 billion, you know, loss in the most recent quarter, mark to market.
Yeah, the digital asset treasury, I guess, boom, for lack of a better word, does seem to have pulled back significantly. I think that we're seeing accessibility to these things more directly now than I think people originally thought that the instrument of the DAT was actually going to offer.
How much are VC investors waiting for a passage of the crypto market structure bill?
We are focused on it, and obviously we want it to come. The positive news is we're seeing the SEC and the CFTC start to move forward as well from a rulemaking perspective in their joint task force that they announced a couple weeks ago. So we're excited about the 2 parallel paths, both from market structure and the regulatory clarity. But yeah, it's a huge focus for us. I mean, it's what I would expect it to be at this point, given how complex this bill is, how complex the legislation is, and you have so many different interest groups across the crypto industry. So it makes sense that there's a lot of conversations where people are lobbying for what is in their best interest. And, you know, we're seeing conversations happen. It's moving a little bit slower than we would like it to, but it is progressing.
So if we look past that, and let's say that does actually get passed and get signed into law, what is the next catalyst that you're looking for? What do you need from Washington?
We need constructive rulemaking once it gets passed, because once the bill goes through, obviously there's a period of time before it actually gets enacted and you get the rules out there. So hopefully we continue to have the bipartisan support in the conversations on that.
What's the one industry that that the startups are looking to disrupt right now? I mean, we've seen everything from legal software to financial planning to insurance brokers. What's the one area that is getting a lot of attention?
It's hard to say one particular area. I do think that AI is really interesting from a blockchain perspective because you have the transparency, but then you also have the AI component on top of it. So we're starting to see projects really focus on the combination of the 2 technologies.
Makes sense. Very 2026.
Katrina, always good to